The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 24th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes. Back with you. Missed not being here yesterday. It always helps to have internet. And that's a beautiful thing. Hope you're all having a wonderful day. Well, if you're not, let's make sure that we do. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Just like yesterday. All right? Now, I'm absolutely grateful for your presence here. I'm here to serve you, so feel free to pick up that phone. Dial on in at any time at 877-927-6648. Internationally, 727-445-1044. Would love to hear from you, especially on this terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 33 points at 17,826. The S&P up a couple points, trading at 2,089. NASDAQ Composite down 6 points at 5,096. Russell 2000 up 2 points. The DAX closed down 158 points. The FTSE closed off 28. Gold's trading up $7.50 right now. Silver's up 15 cents. Light sweet crude up $1.21. Natural gas back a couple of pennies out here. Leading the charge to the upside, we've got Palo Alto Networks. They're up about $11, 6%. American Woodwork Corp, they're up 9%, $6. Pioneer Natural Resources up $5. Athena Health up 7. NXP Semiconductor up about 6. Post Holdings up $4. Chipotle up 10. To the downside, Priceline off 42 buckaroonies out there. That island reversal top, boy, that has cemented a significant high out there. Cracker Barrel down about $10 right now, off 7%. Tech Data Corp out of the Tampa area. Down about 9%. Regenerative Pharmaceuticals off about $5, and Calo Bios Pharmaceuticals off 16%. Okay, so where do we begin? You know how I say there's a gift in every set of circumstance? You know, yesterday, nothing could have been, thank goodness, I was able to, well, normally I get my newsletter out right around 8 o'clock. Sometimes just a few minutes early, sometimes a few minutes late out there. And at something like around 8:15, 8:30. I don't remember the exact time. The internet shut down, and it shut down, and it stayed shut down all day long. Now, when you're in this business here where you are thriving upon information, you need data. And if you're a technical trader, in order to understand, where the markets are going, what levels, you feel like, oh my goodness. Now, it could have gone down to the Starbucks on the laptop. I just didn't really think it was appropriate to do the show from there. Could have worked there because I've got a backup system on that. But instead, the gift was there was something that was troubling me. And that was with regard to really understanding the correlation between rising interest rates, the market, and so forth. You know, I've done some studies. I've shared them with you. But there was still something that was bothering me. I shared that with newsletter subscribers this morning. It's something that, quite frankly, you'd like to get your hands on. So you can do that. Just come on over to the homepage at TFNN.com. Just test drive Mastering Probability for the next 30 days. But the cool thing is that there is a gift in every set of circumstance. And I found I was able to go back to data into, I think I took the New York Stock Exchange, advanced decline line. That's the only hint that I'll give you. Back into the 1960s out there. Was it the 60s? It was a long way back. As far as I could grab the data for it, you already know we've taken a look at the Dow, for example, going back to 1865 out there, and it unlocked the key to what there was something that was troubling me. I was able to find. Now I didn't know what I was going to find out there. There was just something that was just kind of sitting there. You ever have that feeling? So there is always a gift in every set of circumstances. But let's go take a look at the circumstances of the markets, what they're communicating to you and I as of 1/11. The good news is it'll change if we just give it enough time. Now let's just take a look at the intraday time frame out here, because there is something. If we take a look at the NQ right now, we're going to look at the 30-minute contract. We're going to see a couple things. We're going to go, well, I'll explain to you what the markets have been doing thus far so we can go take a look at it. But the NQ out here, it made a high back here at about 10:30 in the morning. That was back on the trading day of November 23rd. What's today? That's the 24th. So as we take a look, that's the actual high out here. That is formed. And as price has been moving lower, now that high here on the 30-minute, you would, other than it being a sixth wave count to the upside, you really wouldn't know, hey, is that going to be the end of it or not? And it really wasn't the message coming from the 30-minute chart. Let me just back up for a moment. The moment the message was really coming from this chart right here, the 120-minute chart. Remember, we like to take a look at multiple time frames out here. If we take a look at it, as it was making that same high, you can take a look at it. You can see a seventh wave count to the upside. It's a beautiful thing. And on top of that, price is moving higher with what? Less relative weakness out there. So it was really the 2-hour chart. What you want to see a longer-term chart provide you with a signal, right? So it was really the longer-term chart that was providing us with a piece of information that the market wants to do some type of retracement. To what extent, you just don't know. Now, this morning, as the I got the ES mini, grabbed up the wrong chart. This morning, as the NQ was moving lower, in case you wanted to know what it was doing, why did it stop where it stopped out there? If you take a look at price now moving down into the time period here of 11 o'clock, by 11:30, there was your message. We saw price moving lower, doing it with less relative weakness. We then saw that nice big old bullish engulfing candle. And in fact, price went ahead, and on the 120-minute time frame chart, it went ahead and it took out the low. What I mean by the low of the TAS market profile, got above the point of control, and certainly was going to move up to the top of that box, 46.55. Well, and that's on the 30-minute basis out here. So let's go back from the 30-minute into the 120-minute. Here's where we're going to see what's really going on in the market as we speak. Now, the 120-minute time frame doesn't end until 2 p.m., so we got 45 minutes. So I'm not certain how this is going to end. But if we take a look at it, in the upper left-hand corner, you've got the NQ. In the upper right-hand corner, you've got the EES. So you've got the S&P futures. Lower left, you've got the Russell 2000. Lower right, you've got the Dow. Now, these are the same 120-minute time frame charts. They just happen to have our TAS market profiles out here. So we've got the lines of support and resistance. Now, what's interesting as well, so as the NQ was making its low, if you take a look at the chart here, price was moving right down into the bottom of the box, 46.39, which is also right where that point of control is. My experience is when those two line up like that, is telling you that there is significant support. Now, at the same time that was occurring, if we just gander over, I'm not sure what gander over means, but it sounds pretty good. Maybe it doesn't sound that good on Turkey Day if you're a turkey, but in gandering over and taking a look at the right-hand side, the upper right-hand side panel, you'll see on the ES Mini, take a look at that point of control very close to the bottom of the box. That, too, was giving you and I a message that that's a significant level of support, if, in fact, that could have been overcome. And inside the ES Mini, it was just by a tick or two, so it really didn't get overcome. It says, hey, I'm going to go ahead and bounce to the upside. So if we take a look at the 30-minute chart, which you and I just did, we took a look and we knew that price is moving lower with less relative weakness into a significant level of support on the 2-hour chart. You move over into the right-hand panel inside the ES Mini. These are the two that, in essence, are really kind of controlling the tables here as we speak. We saw another level of support out there. So what did price do? It found a bottom. Not only did it find a bottom, price went ahead and it bounced right up to the top of that box. Now, the ES Mini, I'll go ahead and explode that on my screen. This was truly set up, well, the NQ as well, truly set up for as a bullish setup. Now, price has taken out a level of resistance. Not necessarily a strong level of resistance out there, but that's at the 2080.75. You're now 3 points, about 3 points trading above that. So where is it that the ES Mini is going to? So we're just really connecting the dots here. What do you and I do? What you and I do is we simply go from one time frame to the next. We're always looking, just like you're flying an airplane. What's up on top? What is down below, and of course what is straight in front of you out there, right? You're always looking to understand what the airspace looks like. In the way that you and I do it, no matter what time frames, just simply, I don't know, multiply it times 2, divide by 2. You'll come up with a set that works for you out there. And if we go now, take it from the 2-hour chart into the 5-hour chart, of course, that's not multiplying times 2, but that's like 2.5 out there. As we take a look at it, I like that 5-hour chart out here, and because not too many people look at it. And as we take a look at it and we go over into the ES Mini out here, let's take a look at it. What we've got is we've got the daily. I've got the, I don't even have the 300, so let's just leave the daily. So we're on a 5-hour time frame, but the profiles that are being shown are the daily profiles. Now, just as you and I took a look at on the 2-hour chart, right, where the point of control was closer to the bottom of the box, what you and I know is that the point of control in the daily time frame is closer to the top of the box. And we know that has been a significant level. It's been a pain in the chart out there. Ooh, you thought I was going to say something else. It has been a pain in the chart for the ES Mini to clear that level. That level, now that doesn't mean that it doesn't do it intra-bar, because it has, but if we just take a look and we stay with the 5-hour charts out here, we're going to see, what, 4 dojis, almost 4 or 5 dojis out of last 2, 4, 6, 8, 10, 12 candles, something like that out there. So it tells you and I that the market is tired up at these levels. It is sick and tired, but it's still tired nonetheless. And it's sick and tired because it is a significant level of PS, de resistance. And that says that that 2,089 level is a key area for price to close above. Now, this is a 5-hour chart we're looking at. That says that at 2 p.m., just happens to coincide with that 2-hour chart on the NQ, on the ES Mini out here. So at 2 o'clock, as we're going off the air, if we see it close above 2,089, and here's the problem. If it's 2,089 and a quarter, somebody's going to say, hey, it closed above it. Let's go ahead and get some real conviction behind that move. And let's just say close above the most recent swing point. That's from 9 o'clock on on November 20th out there. That price point is 2,094.50. So we'll just call it 2,094.75, one more tick above that. If we see a close above that level, that says that price moves to a higher high out there. Now, where would that take us to? That's an excellent question. Let's go over, take a look at the daily chart, because I don't know where the weekly profiles are, but we're going to find out momentarily as we take a look at the daily time frame out here. The weekly profile, shoot, that's not even there. There is nothing out here to stop it. So if, in fact, the ES Mini can close above that level, what it says is you head back to the highs out here from November 3rd. That's at a price level about 2110. More likely than not, you get back to this, this a daily chart we're looking at, kind of like a triple top-ish area. And it's not really a triple top, but if we take a look at it, it's the highs that were made out here in May 19th. That's at a price point of about 21.18. The highs out here from July 20th. That's about 21.1850. So it's that 21.19 area where price would likely head to out here. So that's how we go ahead and we connect the dots. I don't know whether price is going to get above that level or not. We know that price found support where it should, and we also know that the ES Mini is up against resistance. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 43, S&P's up 3, composites off 3 points as well. So we had the Russian fighter jet shot out of the skies out there. You know, the interesting thing, if we take a look at gold, I think that was like around 3 o'clock in the morning. So does anybody have the exact time on that, by the way, inside the Tiger's Den? I had intended on taking a look at it. But the reality is, if we take a look at it, what is interesting, you would think, we saw gold was trading higher earlier, but I'll just put a 10-minute chart up on my screen out here. Oh, let me do this. Let me get rid of some of the profiles out here just for the moment. There we go. If we take a look at the actual spike that we see here in gold, that took place at 7:50 and 8 o'clock this morning. So that wasn't it, right? We know that the jet was shot down much earlier. And you don't see any real big volume spikes out here, any big, really wide-ranging bars. It looks like around 2:20 a.m. So if we take a look at 2:20, thanks, Tom. If we look at 2:20 a.m., heck, there was really no movement inside of Goldilocks out here. So, the movement in gold, we saw some nice volume come in. That took place at about 7:50 this morning. All the way back here, yesterday, there was a volume spike to the upside. So what we are seeing are volume spikes to the upside inside of Goldilocks. I don't recall if there was any event-driven thing yesterday that caused that, but we can see that the spikes, for the most part, I say for the most part, because at 8:30, there was a spike, that shows a down bar, but the reality is it had just pushed to a slightly higher high. So I've got to give, the bulls more of the credit on that one. It was actually pushing higher. So gold's pulling back. It's just a 10-minute chart, by the way, that we're looking at, pulling back with light volume. Okay, that being said, now part of what is transpired here was we saw the euro that was pulling back. So the U.S. dollar index was pulling back. Actually, let's do this. Maybe this is probably the better approach out here. I don't know why. Thank you for suggesting that. I don't know why I didn't think of it. But if we go take a look at the U.S. dollar index, so let's put that up on our screen out here. So we've got DX pound sign F. We'll put that up on the top. I guess we'll put that on the bottom. And in fact, what we ought to do is we'll change that to a 10-minute chart. Let's change that instead of a line chart. We'll leave it as a line chart, but let's go ahead and flip it. By flip it, let's go ahead and invert it. Let me see if I can do that. Times -1. Let me see if that works. Does that do it? Invalid symbol. That was close, but it was no cigar. Let's try that one more thing here. Now let's see if that works out here. So we're going to try to, the reason why we're going to flip it is because of the there we go, the correlation it has to gold. Now let's go ahead on the top symbol here, and let's put gold. So give me a moment here. We'll put up the gold contract. GC Z5 equals 1. There we go. We're going to put that on a 10-minute bar, and I'm just going to leave the line chart up on my screen here. So it says trying to resolve the symbol. It's just trying to, there we go, trying to replenish it. So now what we're looking at is a 10-minute line chart here. We're going to go to the 2 o'clock time frame, so 2:20 a.m. Eastern time. And what we can see here, the bottom portion of my chart is the U.S. dollar index, inverted. That means that if it is moving higher, that the U.S. dollar index is really getting weaker. Okay, and so if it's getting weaker, you should anticipate that gold is going to go ahead and move higher, right? We got gold priced in multiple currencies. The two that I think that you and I should pay attention to are euros and the U.S. dollar index. Of course, you're almost saying one and the same, almost, because gold priced in dollars, or the U.S. dollar index, 65% of it is the euro anyways. But as we take a look at it, we can see that, the response, whatever took place in the market, all right, we see that the euro was moving lower. U.S. dollar index was getting weaker. It was moving higher. And gold was really following, that same dance step. We can see here the U.S. dollar index was getting stronger right about 9 o'clock this morning. And in essence, gold is pulled back. So, look, it's not tick for tick, but it's pretty darn close, directionally speaking, out here. So it had more to do with the currencies and the valuation of the hard currency than it did with regard to, Russia losing a fighter jet out there. It's a war, right? You got to expect all that kind of stuff to happen. Okay. Or anticipated, at least, right? My goodness, how can you not anticipate that, right? It's always about like you fight any battle out here, your own battles, it's always about in your business, that the best thing to do is always keep your cannons pointing outward. In any event, let's just come back to this. So you and I know what's going on with regard to it certainly appears that we know what's going on with regard to the price of gold. So when we come back, let's go take a look at the GLD just to make it easy for you. I think what we're going to find out is that gold has bounced on light volume. So that says to me, and we'll go take a look at the euro and see what it's doing. Probably gold to the downside's not over, not just yet. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 54 right now. S&P's up about 5. Composite up 2.5. So we were taking a look at gold before we went into that breakout here. And if we just take a look at the GLD as an example. Now, if we were only trading the ETF, we weren't paying attention to the contract, what we would see is a completed 1-to-1 A to B equals CD to the downside. That's starting with a swing point out here from January 22nd, about 125.58. That's your A point, your lightning bolt. Your B point down here on March 17th at 109.77. That had volume, by the way, of 8.9 million shares. When it was surpassed, it was passed with 9.2 million shares. So that B point was taken out with volume, just slightly more, but nonetheless it was. Had a projection of 102.07. The actual low so far inside the GLD, that took place on the trading day of November 18th and 102.04. versus 102.07. You got to love that. Now, that doesn't mean that that's where price ends out here, but it did complete an A to B equals CD to the downside. Now, there was a day where we saw a bit of a bounce. I'm going to get rid of the A to B equals CD pattern. We know that gold or the GLD as well is trading below the July 24th swing point, but that swing point at 11 million shares, we're down below it with 9 million shares, 8.5, 5, 6, 4. So we know that we're below a swing point with light volume. That's at 103.43. We did see a move up into it. This was back on November 19th, 5 million shares. Now today, and then it pulled back here yesterday, right? It pulled back yesterday with 4 million shares. And today it's probably going to do a bounce of about 3.5 million shares out here. So maybe there is a really small A to B equals CD that it's building up as we speak right now. So I don't know. You know, we got to bounce out. We had yesterday down with volume, today up with light volume, it looks like, and maybe it's a small A to B equals CD to the downside out here. Ideally, though, and if you go ahead and take a look at that previous segment we did, we really have to totally get our head wrapped around what's going on with the euro, what's going on in the U.S. dollar index out here. So if we take a look at just the euro and we see if it's really trying to find a bottom out here, we're just about today, it looks like it's doing the kiss and tell of the 50-day and 200-day simple moving average out here. Just trying to go ahead and pull this back far enough. You can see that. Looks like we're very close to a crossover if we're not already there. No, we're not there just yet. But let's not worry about that pattern. Here's what we really want to be paying attention to. And let me just expand this up, pull it up a bit here. It's going to be easier to see. What you and I know is that price is really traveling inside the euro right now. It's traveling within this swing point. Let's do this. Let me make that the swing point that is testing in a different color line. Let's make it a... looks like my only choice, purple horizontal line. Yeah, let's go with purple. Apparently, this is the Barney color. I don't know how I came up with purple, but I did. That's more like fuchsia, I think. That's bright purple. That's deep. That's not deep purple. That's bright purple out here. But what we can see, and this is where it gets interesting. This is where we have a little bit of uncertainty because what the euro's done now, in essence, it's made a 100% move of a move, right? So we'll probably see the same thing or very close to it inside the U.S. dollar index. But what it has done out here, when I say that, I'm really referring to the swing point low, which took place on March 16th. And if we take a look at that, I'm actually looking at this, the high of that swing point, which is 1.0619. We see that level was tagged yesterday, rejected. Today's actually a little bullish engulfing candle out here, but a very small-bodied candle. And so it's not exactly as if there's conviction behind the move. I personally would feel better, and I think it's more likely the case that we see the euro make its way down to about $1.04, 1.0459, the low of that swing point. And I don't know if that takes place tomorrow, if it takes place on Friday when nobody's looking. Like I can't guarantee that it's going to take. Here's the deal: if it closes inside that swing point, which it hasn't done just yet, if it closes today, which it could do, below 1.0619. Then it increases the likelihood that the low of that swing will get tested. And if it does that, then we're going to see the U.S. dollar index move higher, most likely. It depends on what the pound and the yen and the krona and the Swiss franc are doing. But more likely than not, we would see the U.S. dollar index get stronger, and maybe it becomes the flush out. That's what I think really you and I want. We want to see gold make a nice big flush to the downside. This would perhaps facilitate that move out there and get rid of everybody that says it's over, it's continued to be over, they're back on that tune, and basically it gets everybody in one side of the boat, everybody except for those folks here at TFNN. So that's on that's what I would like to see happen. That's what I'm anticipating, but I'm also anticipating, if that doesn't happen, looking for a close or some type of sign of strength that says, hey, the message, the signal actually came yesterday, Steve-O. How come you weren't paying attention? The reality is I will be paying attention. You just show me some kind of sign of strength, and I'm all yours. Okay, so we've got that. I think that covers currency pair. I've got a request here to take a look at Alibaba. So let's go take a look at that. BABA is the ticker symbol. And as we take a look at it, it's trading at Looks like we had a sign of strength in Alibaba. Let's pull this. Let's put this down here. So Alibaba pulled back. It looks like a little breakout area. Yeah, so Alibaba off of the lows out here from September 29, 2015. It got down to 57.20. And on the way up, it didn't really give you a sign of strength day until October 27th. I don't know what took place on October 27th. I just know it was a wide-ranging bar with accelerating volume. It did volume of about 51 million shares, and price came back into that gap, into that breakout area, which would have been the prior day. Never got down to the low 75.13. It got close, got down to 75.64. So it came back in. There was another breakout here, slight breakout. Never got back to that, which was October 23rd. And so now is the question, is it making an A to B equals CD to the downside? And ideally, this person is looking to go long. And ideally, the answer would be yes. Here's what it would look like. That's assuming that yesterday's high was the high or the B point. And it would look something like this. This would be the ideal trade setup for you. And that's where Alibaba would make an A to B equals CD to the downside. I don't know if it's a 1-to-1, 1-to-2, 1 to 1.272, if it's an expansion. Look, I don't even know if it is. We just need to, but if it is, why would I say that that is a setup? And of course, it depends on what volume would look like as well on the move down. But if we take a look at from a low, September 29th, what the heck is going on? Oh, I know. I've got it on the expansion side. Give me a moment here. We're going to try to find a retracement. Must be the default. And if we go from the low of September 20, there we go, September 29th to the high of November 5th, we've got a 1 to about 1 to 1.2728. Boy, this would be beautiful. So your buy, well, it's beautiful for a number of different reasons. How about take a look at all this stuff out here? Let me get rid of these moving averages for the moment. Give me a moment here. I'm going to clear up this. So here's the trade setup inside of Alibaba. If it were to occur like this. So let's do this. Let me turn off the A to B equals CD2. We'll come back and put that on here. Let's get rid of the horizontal levels. Got that? We got one of them that's gone. So I'm gonna just delete that. We don't need that on there anymore. Or at least I don't need it on there. You don't need it on there. Okay. So Alibaba, this is really kind of cool if it sets up. If you look at Alibaba from the high out here on November 13th, we can draw a trend line. That's the red diagonal line on my screen out here. So the top of that swing point, then the top of the swing point for May 22nd, we can see that the trend has changed inside of Alibaba. Once price got above that trend line, it signaled to you and I that there was a potential change in trend out here. Now, I say the trend has changed because you had that nice sign of strength out here. You had that gap up on October 27th, right? So there was actually some conviction behind the move. Now, ideally, we can see that the 0.618 retracement is 68.36. I'm going to go ahead and I'm going to just turn that off. So just remember the 68.36 mark. I'm going to go ahead and I'm going to extend this trend line too, because we know that because price broke above it, but so far it hasn't tested that level. Now, when we turn the A to B equals CD back on, you can see that the 1 to 1.272 level takes us right back to the trend line. That would be pretty cool. And that's right at a price point of about 68.48. Now, look, we're not going to be exact here. This is not about being exact science. We're looking for, so that's at 68.48, and the Fibonacci retracement of the 0.618 is 68.36. I mean, if that were to be a setup, then that would be the time that you'd fire away. Now, that assumption is that you're not moving down into that level with some kind of wide-ranging bar out there. And you'd like to see it ultimately get down to that low, passing the November 13th low with less than 24 million shares out there. Now, that's one possibility. The other possibility is, as I say, nice work. This is where you've got to prepare for both sides of the trade, right? If we might say, hey, nice work there, Steve-O, but, close but no cigar. I'm not going to do that. Instead, I'm going to make an A to B equals CD to the upside. And could it be doing that? It could. Let's go ahead and turn this off. So I've given you that level. Now, why could that take place as well? And one of the reasons why that might be able to take place at A to B equals CD to the downside is if we take a look at Alibaba, on that way up, when it made that high out there, it made that seventh wave. So off of the low from September 30th, it made that seventh wave to the upside. Usually you see your swiftest type retracements there. So it's really possible for that to play out to the downside. If it doesn't, and the reason I say if it doesn't is because Alibaba could start moving with the markets out here. And the markets, you should anticipate, are going to move to higher ground by the end of the year out here. Then Alibaba could be making an A to B equals C to the upside. Or at a minimum, and what does that look like? Well, What that could look like is the following. You'd use the September 30th as your A point. You'd use this high from November 5th as your B. And right now, the only C point we've got is down here on November 13th. Now, the 1-to-1 takes you to 104.86. Now, that would say that it has to get above this little breakdown area. It had a little nervous breakdown right here between the price level. Again, we're using the Barney colors out here, 97.79 to about the 105.20. And at 104.88 or so, that's your 1-to-1 A to B equals CD to the upside out here. So that's looking at both sides of the trade on Alibaba, BABA, being the ticker symbol. Okay, I think that is the only other request out there. And if there's something in the den, please repost it for me. Let's just for the heck of it, take a look at a couple mining equities just to get a feel for what's going on there. Let's look at AEM, Agnico Eagle, see what it's doing out here. One of the stronger mining equities. I think there's others that are a bit stronger, but this is pretty good. This thing here we know from low to high. I didn't get the price line, but I will, Bill. If we go from the low to the high, it's made a nice 0.618 retracement out here. That's at 24.84. It's really just been consolidating sideways, almost more as if there's accumulation going on. It's been relatively light volume, a little bit of a back off on November 20th with a tad of volume, 3 million shares, but nothing compared to the day it's really going against. 5.4 million shares out here. So I don't really have any clear message other than this equity, which is a strong one, is holding up pretty well. So what's weak out there? Gold Corp, I think, is pretty weak. See if there's anything inside of Gold Corp out here to help us out. And there's really not anything here to that I see as a sign of strength or anything. I guess we could put some market profiles up just to see what they're doing. Let's do that on the week guy out here. Let's put this on Gold Corp. See if there's anything on the daily and the weekly. No, it's just really finding resistance out here. So nothing here to assist us with understanding what may be going on inside the metals trade or metals market out there. Our question was, could I take a look at Priceline? We can. We know Priceline had the island top reversal out there, so that is as bearish as you can get it. All-time highs, so it's hard to get any more bearish than that, and that's on Priceline. I would contend that when you take a look at Priceline, the logical level of support, there's a couple of them, right? First, we could take a look at trend lines. Let me do this here. Let me take this back on a longer-term chart. Let's put this on a monthly, see what kind of, look at that. Look at that little rocket ship out here. But nonetheless, let's go ahead and let's try a channel. Man, this is such a move out here. Let me just give it a shot, give it a whirly, right? We can always get rid of our, that's not the trend line. No, not a channel. That's not even the channel line. Perhaps what we need to do is we'll start here from what looks like in 2010. Which is kind of odd, but let's use it. So, yeah, that's probably more accurate than anything else. So that becomes, I would say, just looking here. Yeah, that is probably the channel line. That is probably it. Okay, so in this case here, I'm going to go ahead and use this. I'm going to pull it back, but let me just get rid of the third level out here. So, you know, when we take a look at either horizontal or diagonal lines of support and resistance, what I've drawn for you on my screen is the first channel line, in essence, that Priceline was traveling. And I'm using approximately here the low from, or the bar, the body, the open from July, for the month of July 1st, 2010. And that really becomes our next touch point. The top of which really was, in essence, the March 2012 close, which was around 717.50. And we can see that price was traveling with inside that. And when price broke above that, which was back September 2013, all that it did, it went up to the next level of resistance, which was equal to that price difference of that first channel. So horizontal, diagonal, they really work the same way out here. Now, on a monthly basis, that's about as bearish a candle as you can get. Why? Because so far it's a key reversal on a monthly basis. This suggests that price moves down to the bottom of that channel line. And where is that priced at? Looks like around 1085, 1090, somewhere right around there, 1100, before it really gives you the next piece of information. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow, she is up about 38 points, S&P up 3. If we take a look at the VIX index here real quickly, what we can see the VIX index did this morning, very close to testing and rejecting its 50-day exponential moving average. Currently, right now today, at the moment, it's priced at 1748. Of course, as price moves around, it changes just a tad. The high inside the VIX index today was 1721. So it's close enough right now for a test and rejection of that area. We're close to the low of the day out here, and it looks to me me, more likely than not, what the VIX wants to do is move lower down to about 1462. So if it, in fact, does that, wasn't able to bust it to the upside, moves down to 1462, you can expect the market to move higher slash sideways. I don't see anything here that really is bearish. The Dow, just a tad, but its price oscillator just slightly below zero, but that can be resolved easily by day's end out here. So that takes us really back quickly here, not quickly, but it takes us back into, I believe it was the 5-hour charts that we were looking at. So at this stage here, it's all about the ES Mini, quite frankly. You know, oftentimes you might say it's all about the NQ or the Dow or maybe even the Russell. I'll tell you right now, with regard to what the market does or doesn't want to do, it's going to all be about the ES Mini. The ES Mini on this 5-hour time frame, resistance 2089. The actual high so far 2089. It has not been able to clear it. Doesn't mean that it won't. And if it does clear it, we've already given you the parameters on that. And if it is unable to clear it, says you can move all the way back down to the lows out there. Now, is it going to get back to the lows of the day? Probably not, but anything could happen. There's no high volume low on the intraday chart on the ES Mini to say that it needs to do that. The NQ is the one where it did start to sell off a bit. So, you know, there it says 46.37 to 46.20. It's a possibility out there. But watch the ES Mini. I think that's the only thing you've really got to keep your eyes on. That would be keeping your eyes on the 8-ball question. If I would take a look at gas and natural gas, and I will, happy to do that. If we take a look at natural gas out here, you know, I can't find, I don't see the bottom here just yet. There's no reversal signal. If I just take a look at expansions between the last sets of swing points, that's the low of October 30th and the high of November 16th. You know, it's made pretty close to 1.68 expansion of that, but that's all that I can see out here. I can't play in that litter box out here. I just doesn't, not that I'd want to play in a litter box anyways, but I think that's what you're doing if you're taking stabs here, other than intraday inside of natural gas. Instead, you'd rather play in a sandbox. And if we take a look at the sandbox for light sweet crude, of course that comes out of the sands, right? If we take a look at it, and this is the January 2016 contract, right? So we rolled over to that. The bottom swing point is August 24th out here, and that's anywhere between 39.97 and 42.67. If you're trying to play this here, let me do one thing. I can't do it in the next few minutes out here. Maybe we'll take a look at it tomorrow. But at this stage of the game, you know, it really does look like light sweet crude has come back to a level of support. That's what it looks like to me, because it's come back to its breakout area. You can't get 3 more wide-ranging bars than you've got out here. I mean, you know, you just can't do it. So that's what's that? 3 white soldiers to the upside. So prices come back to that level. Folks, stay tuned. Our man David White will be up next. If you're traveling today, tomorrow, be safe. No drinking, no driving. Uber it if you need to. And I'll see you tomorrow afternoon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.